So you're buying a house. Where's the down payment coming from? You may be sitting on it already. Come on back, I'm gonna tell you where it's at. Today's big topic, where are the down payment funds going to come from? It's Brandon with Integrity Home Mortgage once again, just talking to you real quick about some down payment tips. If you like the information you're hearing so far, please click that subscribe button. Love for you to get our notifications of every time we release a great video. We do try to put as much content out as possible. All right, into the tips. You have lots of options when you're even a first-time home buyer. You may have incentive programs out there or grant programs, down payment assistance, things like those. Now in this market, 100% financing with down payment assistance programs or possibly even grant funds may be seen as a weaker offer compared to somebody that is putting money down. So, do you have your down payment already and you're not even aware of it? Let's explore some options and see where you may be able to pull those funds from so you go in with the strongest possible offer, because you're going to need it in the 2022 housing market. It's just absolutely crazy out there. All right, so as I mentioned, there are great first-time home buyer programs here in Virginia. We use Virginia Housing quite frequently. They have some great 100% financing programs and some grant programs as well. Now, like I said, sometimes those become perceived as a weaker offer than somebody coming in with a conventional loan putting 3 or 5% down. The reason I say that is this shows that you have some funds to work with if there's a little fluctuation within the appraisal, a little gap that we need to take care of. So this shows some strength compared to the 100% financing. Now, let's talk about the top 3 places to get a down payment that's not a down payment assistance program or grant funds. All right, number 3, that if we're lucky enough, gift funds from a family member, friend, even employer can be acceptable when buying a home. Double check with your loan officer. You want to make sure, depending on which program you're doing, whether or not the person giving the gift is eligible. Sometimes a friend can do it, sometimes a family member can do it, sometimes an employer can do it. But always check that information with your lender on the specific program that you're doing so you don't catch yourself in a problem down the road. All right, now gift funds are great. If you do have that option, I always recommend that you make arrangements for the gift funds, but don't move the money just yet. There's an easy way and a hard way to do this when it comes to the paperwork that we have to show to the underwriter, and we want to make this process as easy as possible for the person giving the gift funds. So again, gift funds are completely acceptable if you qualify for a conventional loan or an FHA loan, and you can use that as your down payment funds there. So again, talk with your loan officer first, get a solid game plan on how to get that money to closing, because it may frustrate the gift giver as well. Gift funds, number 3 there. All right, moving on to number 2. Now this is if you're an existing homeowner. Let's say you've owned a home for a few years, you're looking to upgrade, you've outgrown the current property, and you need to move on at this time. Now again, in this crazy market, you've got to be extremely strong with your offer, right? You may be competing against 20 people in this case. In order to come with the strongest offer, you can't have an offer that is contingent on the sale of your property. So in this case, what we'll recommend for homeowners is let's obtain a home equity line of credit on the property that you currently own before you list it for sale. And this is where you'll pull your down payment funds from: temporary financing, bridge loan, without doing a true bridge loan there. And then again, you use those funds for the down payment of the purchase of the new home. You then sell your existing property, and once that's sold and it closes, you're going to pay off the home equity line of credit and any other liens against that property, and that loan's now disappeared. You're back to just your mortgage payment on the new property. All right, tip number 1. This is my favorite right here. It's going to sound a little crazy, but stick with me here for a second. 401k loans, right? All right. So we've all been conditioned not to touch our 401ks ever, right? But they're great tools when used properly. Now, most 401ks, and you will have to check with your 401k servicer, but most 401ks will allow you to take a loan against that account. Keep in mind that 401k, or at least that vested balance, is your money. You have access to it and you can borrow it in times when needed. Now, in some situations, a 401k may even allow you to take a home ownership withdrawal with no penalty as well. That's all case by case by your 401k provider or servicer. So again, reach out to them, let them know that you're buying a home, and explore what your options are. But let me explain why this is such a great option. When you borrow money out of your 401k, again, it's your own money, you are going to pay interest on it when you make your payments back to it, but that interest payment's being paid to yourself. So this is a way of obtaining essentially 100% financing, right, between a small loan of your 401k and the mortgage, yet you're paying interest back to yourself on the second loan technically, instead of paying it back to a bank if you did a small second mortgage to cover your down payment. So in that case, it's a win-win. As a lender, this is going to allow me to provide a much stronger pre-qualification letter if you do qualify. The reason I say that is this is going to allow me to show that you're putting some money into the down payment or skin into the game, as we say, versus somebody else that may be doing 100% financing. So again, putting some money into the transaction is going to come across as a stronger offer than somebody that's doing 100% finance. And again, if you're using those first-time home buyer incentives or pre-approval letters, and all lenders' pre-approval letters will have to show that you're financing 100% of that sales price. So again, they want to see you've got some cash to work with and a little bit of skin in the game there. Now, another huge benefit of the 401k loan is that when you take that loan out, you obtain the 401k loan and you do your loan repayment terms with your 401k provider, I, as the lender, do not need to factor in that 401k repayment into your debt to income ratio. It's your own money. You're borrowing your own money, so we're not going to penalize you in that area. So that's another reason why it's a win-win. So in this case, again, explore your 401k. Typically, you're able to borrow up to 50% of the vested balance of your 401k. And again, you do it as a loan. No tax consequences, no tax penalties. And as long as you pay it back on time, you're in great shape there. And again, you're paying yourself back the interest. You want to pay a bank interest or pay yourself? I think that one's definitely a no-brainer there. So explore the 401k. That is tip number one. That is the best place to get your down payment funds. Shows you're putting money into the transaction, stronger pre-qualification letter, and better chances of winning the home that you love. All right, so again, 401k, my favorite spot to go. But let's recap real quick on 3 different options where to obtain your down payment funds that you may already be sitting on. Tip number 3 was gift funds. Friends, family, employers can provide gift funds for your down payment and closing costs. And always a great option for those that have that as an option. Tip number 2, if you're an existing homeowner and buying a home, buying your next home as you've grown out of this property, you can always obtain a home equity line of credit on that departing property, the home you intend to sell, and use those funds as your down payment. And as long as your debt to income ratio allows you to qualify for both mortgages at the same time, then you're able to proceed with a nice, strong, non-contingent offer at that time. Help eliminate some of the competition there. All right, and then again, tip number 1, my favorite, the 401k loan. It doesn't have to be factored into your debt to income ratio. You pay interest back to yourself, so it's a win-win there. And it's just an easier program all around. By eliminating some of the down payment assistance programs and the grant programs, you know, those programs bring in extra rules that we have to follow and some extra hoops that we have to jump through as well. By eliminating those first-time home buyer programs and using your own funds for the down payment, it's going to eliminate a lot of hoops that you have to jump through, most likely have a much smoother transaction, and again, more importantly, it's about having that strongest offer so you can have the best chances of winning the house that you love there. All right, that's all we have today. Once again, click that subscribe button. I'd love for you to get all the notifications of the great information and tips that we're putting out. Again, this is Brandon Lewis with Integrity Home Mortgage, and I'll catch you on the next mortgage tip.